Hello, I'd like to introduce myself. My name is Chris Bird, and I'm a certified CRS instructor, and I specialize in tax law and how it affects the business of real estate and the home ownership of real estate as well, including rental property investments. I'll be coming to the Southeastern Oklahoma Association of Realtors in McAlester, Oklahoma on March the 14th in the morning from 9 to 12, and I'll be speaking at the MOV003 Center in McAlester. And let me tell you about this course. This is one of the best courses that I teach, and it involves the real estate issues and the tax issues involved with the Tax Cut and Jobs Act of 2017. So let me tell you what I'm going to be doing in this course. I'm going to be teaching you the new rules with respect to what's deductible on Schedule A of your tax return regarding home ownership. The SALT limitation, that's the state and local income tax deduction, is now limited to just $10,000 on Schedule A. And that includes basically three things: your state income tax, your property taxes, and your personal property taxes. Secondly, I'm going to be talking about the new deduction and the somewhat limited deduction for home mortgage interest. And while that new limitation probably should not affect too many of your clients, it clearly will affect higher income clients that want to borrow a lot of money to buy a home or a second home after December 14th of 2017. Now, what else? The bulk of this course, the main point of this course is talking to you about what this new tax law does to your own tax return. For example, I'm going to be talking a lot about this new 20% qualified business income deduction, how that's going to put thousands of dollars of tax savings into everyone's pocket, starting with the filing of their 2018 return. Whether you're a sole proprietorship, an LLC, a partnership, or an S corporation, there's a deduction there for you if you do the right things correctly. I'll be talking about how the IRS rules of January 18th of 2019 impact that 20% on your rental property Schedule E. And that's really important as well. We have new record-keeping requirements, we have time requirements we have to meet, and I need to cover that with you. I'll be briefing you on the entertainment rules, the fact that basically entertainment is no longer deductible on business returns. So how do we move that entertainment to promotion and advertising to make it still deductible? I'll be briefing you on the new 50% of meals, which really we were worried about all year as to whether we can deduct 50% of client meals and things like that. And now we know we can, retroactive back to January 1st of 18. And finally, I'll be talking to you about the new rules on the deduction for mileage on cars, the fact that the standard mileage rate has been increased to 58 cents a mile, and the new higher deduction if you're going to take actual cost on your vehicles, for example, on cars or the heavy SUV or pickup trucks. So I guarantee you this is a win-win-win seminar. It's some of my best material, and I hope to see you on the morning of March 14th in McAlester, Oklahoma. Thanks, and see you soon.